Whenever
Thank you
you're ready.
everyone for joining us today. I'm Carl Parnell with Homeowners Financial Group, and we're here to talk about First Time Homebuyer programs. Now, the first question I get is, why are we focusing on First Time Homebuyers? According to NAR this year, 31%, which is down from 33%, of all buyers are First Time Homebuyers. Now, First Time Homebuyers is defined by the federal government in two different ways. Someone who's ever owned a primary residence, never has owned one, or someone who has not owned a primary residence in the last 3 years. So you don't, if you have someone comes to you and said, yeah, I had one about 10 years ago, but I've been renting ever since, they get their first time eligibility back to them. So it's a great way to talk to customers, and a lot of you here are newer to the industry. A lot of the age group here is a little bit younger, so most of the time it's younger people who are buying first time, or you'll have people that had a financial crisis dating back all the way to 2008 when we had the great crash in the real estate market, that had been renting and thought that they lost their home, they can never get back into the home purchase market again, which you can. So just want to make sure you're aware of that. Someone tells you, oh yeah, I had a home years ago, I lost it, I can't buy a home again. That's fine. There's ways to get it done. So now, 93% of first-time home buyers have to finance. So not everyone has cash. I know we've been cash crazy, and in my world, that's a dirty four-letter word, because I sell money, so I'm hoping everybody will finance. But in this particular case, cash is a very common. You'll have family members that'll buy for them and so forth. But most of the time, as you can see according to NAR this past year, 93% need financing. And so if you can offer, hey, I've got access to programs for first-time homebuyers, that might get you the hook into that customer to use you versus the next guy that may or may not have access. These programs that we're going to talk about today, there's a small percentage of the mortgage companies out there that do provide these types of loans. So it is a niche market, and I've been doing this with these first-time homebuyers about 30 years. There is a board for the state of Florida that's called the Florida Housing Finance Corporation. They're based out of Tallahassee, quasi-government entity. And what they do is back these and also help us administer these loans. And I'm on their board and have been for a number of years, because I do quite a few of these and I've been doing them for so long. So they feel that I'm very confident to go out and promote and sell and work with these products and help the buyers. So that's why we want to talk about first-time home buyers, because if you do get one, there's just a 93% chance they're going to need some money. And 30% of first-time home buyers need assistance in some way or another. One of the favorite ones is family may help them with a gift. And we would need to talk about that. If you have a customer that says, oh, my parents are giving me some money, there's a procedure the federal government requires. So we'll talk about that. Or they need assistance from these first-time homebuyer programs. So this is the reason why we're talking about this today. Now we'll go up here to the next slide. We'll get over here, and let's talk about the programs themselves. Okay, so the first one we have here is a breakdown of the state of Florida program. And they offer many options. 30 years ago, it was, you got $7,500 and you had to do an FHA. Now they've opened it up to FHA financing, conventional financing, United States Department of Agricultural Rural Housing, which is areas outside of Duval County. And then also you have veterans too. So we'll talk about that. But here's the basics that they required. We have $10,000 of assistance in one program, and this one is Florida Homeownership Loan Program. You see here there's two $10,000 programs. This first one requires repayment at 3% interest rate, and you do it over 15 years. So it's about $70 a month, $69 and some change. And that is one option, and you want customers that say, I want to pay back the money. Then you have the second option. It's also $10,000, but it sits out there. We call it a silent second. No interest, no monthly payment. You just pay it off when you move out of the house or when you sell the home. You no longer occupy it as a primary home. So this option is available for all your different loan products, FHA, conventional, USDA, VA. Now they have some minimum requirements. You have to have a 640 credit score. Every mortgage lender is going to pull at what they call a tri-merge, meaning three, of all three major bureaus, TransUnion, Equifax, and Experian, and take the middle score, not the high of the three or the low of the three, but the middle, called it the Goldilocks, not too hot, not too cold, just right in the middle. So that's what we use, and it's for all applicants. So you could have a husband and wife, and one have great credit and one have not so great credit. We have to take the lower of the two middle scores. So keep that in mind as well. So sometimes it's better off to leave one of the parties off the loan if the other doesn't qualify. But we do have programs here that will assist you and your customers on how to improve their credit. If they're not ready right now, Homeowners has a great in-house team, free of charge, that will work with clients that are willing to do the work, but will guide them, kind of an accountability coach, on how to improve their credit and then get them to where they can buy them and do it a lot quicker than some of these other credit repair companies that will charge a monthly fee because they're making money each month, where here we don't charge anything, but we want to do it as quickly as possible because the only way we make money in our company is we do a loan. So we want to get them into their home and into a loan as quickly as we possibly can. Now the next section here is called Florida Plus. Now this one is FHA conventional, and it offers 3%, 4%, or 5% of the purchase price towards assistance for down payment and closing costs. And this one too, it is forgiven at 20% a year over a 5-year period. So it is a great program to help those that need a little bit of help. Most of the time, the first-time homebuyers will go for the larger assistance because they need more money. But if you've got someone that's got a little bit and they just want a little extra help, this may be a good way to go as well to assist them with down payment or closing cost money. And the money has to be used for one or the other. It cannot be used for repairs, to buy appliances, to pay off debt, to qualify. The monies here can only be used for down payment or closing costs, aka prepaids as well. So anything it takes to acquire the home, you can use this money for. And then we have a Salute Our Soldiers program that helps veterans, both active duty military personnel and veterans, with assistance as well. And still do the 100% financing, no money down, and also get closing cost assistance. Because a lot of veterans will come to you and think, well, I'm doing a VA loan, 100% financing, I don't need any money at all. That's not the case here. Florida is known in the mortgage arena as what they call a high cost state, meaning that we have a lot of fees that we charge, but we don't have a state income tax. So that's the way the government will make money, is through property taxes and also fee income. So you'll be surprised, most of the time your closing costs and prepaids will range between 4 to 4.25% of the purchase price. And usually these programs will cover that. The home buyer will just really have to pay the binder up front, the WDO for wood destroying mortgages and report up front, and then any other inspections they wish to do. And that's about it out of pocket. And with these, depending on the purchase price, they can get in for very minimal out of their pocket. So this is the 4 basics that are offered by the state of Florida through what we call the Florida Finance, or we use their state programs, and they're based out of Tallahassee. So let's go down here.
Can I ask a question?
Go ahead, yes ma'am.
So the Salute Our Soldiers program is 5 years forgivable also?
It can be, you can use that. You
Okay.
can combine it with one of these over here, or you can combine it with one of these up there.
Okay.
So it's optional.
Optional. Okay.
What we find on the Florida Plus programs, you usually have to have a credit score that's better than the 640.
Okay.
FHA is very forgivable on credit. That's the fully backed Federal Housing Administration loan through HUD. So they are more forgiving, but conventional is also government backed now because Fannie Mae's in conservatorship since 2008, since the crash, but they require higher credit scores and to have some money left over in the bank after closing. So you may find a customer that I will work with, and I'll try and conventional first, because usually that's the best way to go. But if they do not, then my fallback is FHA. And then there's also the property as well that we have to consider. FHA, VA are tougher on the quality of the property versus conventional is less so. So you just want to make sure of that. What other questions did you have? Sure? No? Okay. So we'll go to the next screen here. Close that out. And we'll talk about income limits. Now, the Florida Housing Finance Corporation does want to gear this to people that are not rich. And so I love to use this term when I'm talking with customers. If they make too much money, instead of saying, you make too much money, I just say, well, you're too rich for this program. And of course, you get that bewildering look or pause on the phone and I go, there's no such thing as being too rich. I said, well, according to the federal government who sets up these guidelines, there is a difference. So you have here, this is based on Duval County, and these are same for the top 5 up here: Nassau, Duval, St. John's, Clay, and Bay. Hey! So here's, pardon me, we're going to have a brief moment of interruption during our recording. So what you would find is you have 1 to 2 person households. For the programs that do the $10,000, either pay back $10,000 or wait and pay it off when you sell it $10,000. But this program has income limits for 1 to 2 persons. And when I get that question, is it 1 to 2 persons on the application? No, it's household. So if one person is applying, but they've got 4 kids and a wife, then you're talking a 5-person household. And we have to ask if anyone else is making any income in the household. Also, here's another one for you.
Wilton, I think you might be on the...
Oh, am I in the way?
Are you in the line of sight of the
I think I'm
camera?
still right here.
Okay, sorry about that. I can't tell. Where's this lens on that thing? Can you see it?
Oh, I see.
Oh, there it is over there. Okay.
Yeah, you're okay, yeah.
Ladies, we've gone through one slide, but I'll be glad to go back. What we're talking about now is Florida Housing Finance Corporation, state of Florida programs that offer for first-time homebuyers. And just to recap, the definition of a first-time homebuyer is someone who has never owned a primary residence or has not owned one in at least 3 years. So you'll hear the term first-time homebuyer and you go, well, I've never bought a house, but I inherited a house from a family member and I've been living in it for years as my primary residence. It doesn't work. It's not the fact, the action of buying, it's actually owning a property as your primary residence in your name. So just keep that in mind. Now where we are now, we're talking about the income limits for the different programs the state offers. Under FHA, VA, USDA, and Fannie Mae, Freddie Mac conventionals, they have the 10,000 program, the Florida Assist. That's the one that's paid back at a lump sum whenever you sell or move out of the house. No interest, no payment. The HLP is the one that they pay back at a 3% interest over 15 years. But here's the maximum income for the 5 counties in our area: $76,061 for a 1 to 2 person household. And that's all persons living in there. Parents, kids, your mom lives with you, grandparents, all of them. They count as a household, and we have to look and see if anyone else in the household is receiving income. So that's an important thing to know. And then you have 3 or more persons, you have $87,471. So for a larger household, they allow more income. So this is again geared for people that, I know this doesn't look like lower income, but the federal government uses guidelines that tells us what's the average for our area, and they want to gear this program to working folks that just are having they're paying their bills, they can pay their rent, but they're just having trouble saving that money for down payment, which is a very big hurdle for most people. And then you have down here conventional loan programs with Florida Assist. You have here 1 to 2 persons. You have even a higher one, 8620 and 89760 for 3 or more persons. Now, what's interesting on these conventional loans, if you do a conventional, they only look at the income of the applicant. But if you do FHA, VA, USDA, they look at the household. So it's very, very interesting how Fannie Mae does the difference. And up here on FHA and VA, I have to get 3 years tax returns, look at their schedules, make sure that they have not owned a home. And on a tax return, if you own a home, you can do a mortgage interest deduction. So if I see that in the last 3 years, they're out of the program. For this one, don't need all that. And if they check the box on the application, I haven't owned a home in the last 3 years, okay, we're good. So most people try to go to the conventional, it's less documentation, but it does require a stronger buyer with higher credit scores and a little money in the bank after closing, usually 2 to 4 months worth of payments sitting in the bank. And then you have here the conventional one we talked before, the 3, 4, 5%. It only has one number for all household sizes, and it's only for the applicant, 98,000. So this one allows a higher income level than the Florida Assist with the 10,000. So this is the Rubik's Cube when I'm talking to a first-time homebuyer. I'm turning and going, okay, which way do they fit? And it's a good analogy, but it's also fun. Every customer is a puzzle to me, and I've got to figure out how to put it together, and it makes the job a lot of fun. So, but that's just what we do here now. The 3, 4, 5% again is the purchase price is forgiven after 5 years, and it's reduced to 20% a year. So if you have a customer who wants to sell in 3, then a part of that money will be reduced at 20% a year, so they will only owe 40% of what they originally borrowed here. So it's a great program for a little bit stronger buyer. You might want to look at that. Any questions on that part? Threw a lot of data at you. Courtney, you're new. What questions do you have?
I don't have any questions at this time.
Okay, all right. You're always good for questions. So
This is actually confirming a lot of what Karen said in her workshop
presentation.
yesterday.
Oh, you were able to attend hers yesterday? Okay. So that's good. So you've got an extra
Yeah.
bit of knowledge on there. Did anyone else get to go yesterday? Oh, good. Okay. So now you're understanding the difference: conventional, FHA, USDA, all those programs. So I'm glad she was like the prerequisite. Okay. So there we go. Now we'll go over here and we'll take another look at our next one. Now we've got here required documentation and income, not income, but education. So on this one, the first time homebuyer programs, I go ahead and get 3 years on all customers and all pages, and then they have to sign at the bottom where it has your signature, copy of driver's license, 3 years W-2s or 1099s depending, 2 months most recent bank statements, that's bank, 401k, pensions, whatever you have, because we want to show as much assets as you can to strengthen the applicant. 2 months pay stubs, so we can get kind of a trend of what they're making, and name and number of current employers. Sometimes first-time homebuyers have more than one. That's why I use employers plural. And if they are using more than one employer, if it's part-time, they have to be there 2 years. And if it's full-time, we just like them to be there 6 months. So it's not that a problem. Completed sales contract, which will really be helpful for you guys. And when you are sending in a sales contract, hopefully it was discussed yesterday, that a full contract is everything, not just the first 10 or 11 pages, but it's all addenda that go with it, so that when we turn in to our underwriting, we have a complete contract. And there's nothing more irritating is that you have to go back, week before closing and get that 4-year protection, get a home inspection signed and so forth. So I always hit agents up front. I'll scrutinize the contract. If there's something missing, I'll definitely let you know. The biggest thing is page 2 for FHA, where it says it must have a value of, or you can renegotiate. But that's forgotten quite a bit. So like I said, I go through and go back and push back to you guys to get it complete, so that when I turn it into underwriting, that's not a showstopper for us and give us a speed bump. And the landlord information. So if they're renting, we have to verify their previous rental history at least 2 years. So we want to make sure that the landlord information is done. I have a customer now that happens to be a priest, and I've got to go to the church and say, okay, did he live rent-free at the church? Because the underwriter has already sent me a note, and I wasn't thinking. I'm going, okay, well, he's a priest. He lives in is it called a rectory, I think?
Yeah.
I think it's the right term. It's not a parish, rectory. But anyway, and so I've got to get something from the church that he's been living there and been living rent-free, so that they know at least he's been living somewhere. So that's one of the things that, sometimes you get those unusual ones and you forget. And then name and address of the landlord so we can verify. And then what we do as far as when you have a contract, we'll order an appraisal. And this has been the largest hurdle. Hopefully you talked about it yesterday. Speed. Appraisers are taking a long time, and they want their money up front. So be prepared for that. If you write a 2-week closing on a contract, it's probably not going to happen, if not for the lender, but waiting for the appraiser to get their job done. And so I've been running into that quite a bit lately. As a matter of fact, I've got one I'm working on that the appraisal management company said they could not find someone that could get it done in the time I needed. Did you know of anybody that's willing to take the job? I'm like, really? And so I knew a couple of appraisers, and so I just called them up. I said, are y'all too busy to do this in this location? Yeah, I'll be out there in a week. I said, call this appraisal management company. They're looking for somebody. And they call them up and they get the job. So sometimes you've got to go outside the box. It's highly irregular, but that's all that we can do. The federal government's put in some firewalls. We're not allowed to discuss how much we want it to for. I don't really talk about the pricing, how much they're going to charge or anything like that. It's just, are you available? Can you do it? And in the outer areas, since Jacksonville is so large, and then we're dipping into Yulee, maybe McClinney, down to Palatka, outer areas, that's even harder. So sometimes you've got to find somebody. I did one 4 months ago, and the company couldn't find anyone in Palatka. And so I just did Google Palatka appraisers and found this lady, and our company's used it before. And I said, well, here's this, I called the appraisal management company, says, there's this lady here in Palatka that actually lives in the town. Why don't you give her a call? Oh, we don't have her on our list. We'll give her a call. And now she's a new appraiser for our appraisal management company, and she's getting things done. So you just got to do what you got to do. And so that's why the average appraisal fee runs between $475 and $525. So I put the worst case here. And then these programs are also for green card permanent resident aliens. And here's a list of, you need a green card, also if any kind of passport data or any immigration papers they have. So keep that in mind. This is open to permanent resident aliens as well. And I also get the call, how long do you have to live in Florida to participate in the Florida program that's backed by the state? There is no time limit. You just have to live here as your primary residence. And we're getting so many people coming to the state. That's probably a question that you'll hear, well, I need some help, but how long do I? Because people think of college. You have to be a resident so long before you get in-state tuition. It doesn't work here on this one. As long as you've got a job here and you're moving here as a primary residence and you fit the criteria, you can partake in these programs. So don't let that hold you back either. And I used to do prior to closing, there's a First Time Homebuyer education class. This is, they've changed this a little bit. There's several of them out there. I selected the one that's free. But all of them are now about 3 hours long. It used to be up until maybe a year ago, about 45 minutes. And you could just kind of click and get it done. Now it's very in-depth. It talks about credit, ownership, maintenance of the house. So it's quite extensive. And so when you're talking to your customers, prepare them that it's not just to sit quick and do on your lunch hour. This is set up yourself for the evening, get the kids to bed, and then do it. And it's going to take a little while. So just make sure they do that. And if it's a husband and wife, and say only the husband or the wife is the only applicant, anyone who's going to reside and be on title to the property has to take the class. And I agree with that wholeheartedly, because they did not used to do that. And particularly if anyone's been married as long as I have, the husband goes and says, well, they told me this, and the wife disagrees, or vice versa. This way, both are on the same page, seeing the same stuff, and it reduces the amount of questions and frictions and misunderstandings. It's always better to have more people looking at something. So So anyway, so that's the home buyer education. There's a link, and you have all this in your folder that you can give a customer and then go out. Now, also they can call these locations if they prefer the 8-hour in-classroom environment. And this is really good for people because this program only has English and Spanish. But you can call some of these other programs and they'll have more languages than just English and Spanish. So if you have someone that needs assistance in that way, you might be able to find one that can do other languages for you.
Are those also free?
Usually these are about $50 per person. Every once in a while they'll get a grant. Let's see, Family Foundations. Every once in a while the Jaguar Foundation will say for the month of blank, everyone gets free housing, and they just do that as a charitable initiative. So you'll call and ask, but definitely call and ask them. With COVID right now, some of them have been requiring masks, some of them requiring people to be vaccinated before they take the class. So it's good to call and make sure that the customer fits their needs. And so that's basically the information. You have this in here, so you can share with your customers on what is needed. Also on my cards, which I'll give you, I have a quick list on the back of my cards as well, which makes it easy for the customer. So any questions on that? No? I guess I'm explaining it well? Sure? Okay, all right. Please ask away. I like questions. Now, the other thing we talked about here, this one talked about the state program, and it had maximum income limits. Well, and it also required the 3-year wait. We have another program that can be used for first-time homebuyers, or it can be used for non-first-time homebuyers. It's called the Chenoa Fund. This one's interesting. It's based out of, you know, how we have Native Americans are doing different things for business, hotels, casinos. There's in Nevada, there's a tribal community that is backing loans, and this is one of the ways they're making money, is contributing so that people can purchase homes all across the 50 states. So this program is designed for customers that are either too rich for the first-time home buyer, or they do not own a primary residence at this time, but they have in the last 3 years. They can get assistance of either 3.5% of the purchase price or 5% of the purchase price to go towards down payment and or closing costs. So this one is fun to use for the customer that exceeds the income guidelines, but they do not have any savings, but they have a little bit that maybe help with closing costs for the down payment. Had a guy just day before yesterday, Rhode Island, moving down. Company's transferring him, they're giving him a little bit of money for moving, but not enough to buy the house he wants for down payment. He needed $14,000 down, but he had enough for the closing costs, and then he had to save some money for the moving expense. So he heard about me and they said, do you have anything that would help me? And I just sold my home in Rhode Island, and I didn't make as much on it as I was hoping to. So I was able to get him his 3.5% down. He was able to put the closing costs together, and we're closing the 6th. You know, it took about 40 days, but we got him taken care of. Otherwise, he would have had to come down here and rent. But now he's getting a house. So, but this is what this program does, and this one also is 640 minimum credit score. But you notice here, no income limits. Now this one also has another feature. If you notice DACA, we're familiar with DACA in the news, children that were brought here by their parents illegally, but were too young to object and they don't want to go back. It used to be you could not do DACA folks on any of the programs. Well, this one has an exception to that. So if you have someone that's a young person that is not a permanent resident alien, but is a DACA, under DACA, you can get them a home. So keep that in mind. And then also, this program has a forgiven section. So if you make 115% of the average here in Jacksonville, which is, in this case, 75,000, so 115 could be about $85,000. Then you can, per year, you can have the down payment assistance also forgiven. And they're, instead of waiting 5 years, they require 3, but you gotta pay your payment on time within the grace period, which is between the 1st and the 15th, for 3 years without missing a beat. And if you do, then they'll forgive it. But if you late one time, the 3 years starts over again. So it's a way, this one has a 3-year forgiveness feature, which state one has a 5-year on one of their programs. So like I said, back to that Rubik's Cube, you talk to the customer and what they want to accomplish and figure out which program fits best for them. Now, all these programs will have a little bit higher rate than the going market rate. So if you brought your own down payment, your own closing costs, and you had 640 or higher credit score, you would get a slightly better rate, usually about 1/4 to 0.5% interest rate better than if you went through one of these assistance programs. Because one of the ways they make money is charge a premium or a higher interest rate than the going market. So when they sell it, then they turn around and get a little bit extra premium back. And that way, that's how they make some money behind the scenes. So people say, well, I want the best rate possible and I want to get help. Those two don't always go together. So it's one of those, you got to make a choice. If you can get a gift and bring your own money, yeah, we'll get you the best rate possible. But if you need assistance, then the state of Florida dictates, and so does this program, dictates the rates to us. So we get a rate sheet and says, okay, today this is what the rate's going to be. And there is no buying it down. There is no, well, I've got a better credit score than the other guy, can I get a better rate? If you're 640 and you meet all their criteria, everyone gets the same interest rate that day. So
that's with every assistance program.
Every assistance program has that feature built in that they dictate the rate.
That way, I guess what I'm trying to understand is there is a possible drawback of getting to these programs because of the extra interest that is charged in comparison to one that has no assistance.
Exactly. You'll get a better rate if you go without the assistance than if you use the assistance, but not everyone has that option.
Right.
And
Okay.
when I'm discussing it with them, I'll bring that point up to the customer. I said, you might be do a little better rate if you bring your own money.
Mm-hmm.
And then that's when they discuss, well, I don't have anybody, or yeah, my mom and dad talked to me, but I didn't want to talk to them about it. But hey, it may save me, $50 a month.
Mm-hmm.
Maybe I should talk to them. And I said, sure. And we work on that with them.
Got it.
So it's a way of figuring out the customer. So none of my conversations are quick. I get very detailed in with the customer, and I'll find out more stuff than the real estate agents do, because we're discussing finances. So I'll learn more about their situation than the average transaction that you will do.
Mm-hmm.
But I have to keep that confident. I can't go out and put everyone's business on the street. Pretty much like medical, the doctor can't go and tell all his neighbors, this person's got this thing or that thing. I have to do the same thing. I have to respect their privacy. So if you ask me, well, how much money do they make? I'm gonna say, I can't tell you. So that kind of stuff. So just be prepared. Hopefully they discussed that yesterday. So then we will talk a little bit more. Any questions on Chenoa? This is my fallback. If the customer is too rich, then I'll go here. But if the customer is close, then I'll come back over to the state programs and compare them and look at which one has the better interest rate that day, which one offers the quickest forgiveness or the most money. Because sometimes the customers are not worried about the interest rate, they just need the money. And if you're finding out, most customers, first-time homebuyers, the real eye-opening, big-eye look is, I can buy a house cheaper than renting? And it really blows their mind, because right now, interest rates are so low, and landlords are getting every dollar they can. I keep going, landlords, because all you're doing is driving them to us. Because people will end up saying, well, maybe it's cheaper to buy, and next thing you know, they're buying from us instead of renting all the time, and we can help people become homeowners. So any questions on the Chenoa fund or anything like that? No? Okay, all right, so we'll move on to some other information. Let's talk about, again, the Chenoa fund highlights. 3 to 5% of the loan amount for down payment and closing costs. Assistance is either forgiven after 3 years of on time or repaid over 120 months or 360 months. So you'll have, I use the 120 months most often because the 360 months, they charge a 5% interest rate. And so the customer is paying back the loan and interest. And this one, the 120 is 0. So they're taking the down payment, dividing it by 120 and just paying it back interest free. So a lot of times that payment is equal to or less than the 360 month payment. So that's why I'll do the math on that too, and see which ones work for the customer. And there is no income limits on this program. If the forgiven does have a limit, 115% of the average of the county here, but most of the time I use this one for people that are over those income limits that we talked about previously. So in this case, you have a better chance of fitting in a customer. It gives me the opportunity not to turn somebody away. So we got this program about 18 months, 2 years ago. If you were too rich and you didn't have money for down payment, I was kind of like, talk to your parents. Nothing I could do. But now I have another option here that can help people that before I could not assist. So it's a great option to have. And then the other thing here we would talk about is what I like to call another state program, Salute Our Soldiers. This is a huge military county. So again, you go back to particularly the E3s, E4s. They've been in the military a couple of years. They're on their way up. They don't make a lot, and they don't have an opportunity to save as much because usually they have a young family. So this program allows 100% financing VA, and you can see here you can do the 10,000, both types, or the 3, 4, and 5%. And this information here, you do 100% financing VA loan. And this money is really just used for closing costs and prepaids. And as I referenced before, then the veteran is basically putting up their binder deposit, which is non-refundable on this program. It stays in the deal. And then the WDO, Wood Destroying Organism report, that's required. If they decide to do a full-fledged home inspection, that's on them. But that's about it. And then the rest can be covered by these programs. So it limits the out-of-pocket expense for a veteran or an active duty military person. So keep this in mind when you're talking to them, and try to dispel the myth that if I'm a veteran, I have to put out no money. And it used to be that way. When I started 30 years ago, they called it the dollar move-in program. And so we're going back to the early 90s. But anyway, what would happen is the market wasn't as strong as it is now. So a seller was willing to pay closing costs. So you would have the veteran that would probably pay the WDO, no binder, and move in. We're not in that kind of market right now. So most of the veterans need some sort of help, and this way we can do it. But that's a way to avoid the veteran saying, well, I get 100% financing, but I have no money for closing costs and prepaid. Here's a way to do it here. We can get them the assistance that they need. Any questions on that? Yes, ma'am.
I do, on the other programs, you said they'd have to have a couple months in the bank to show that they had some leftover. Is the same for this one?
That's this one here, the 3, 4, 5%. That one requires a bit of a stronger buyer than the two $10,000 ones.
Okay,
The
but
two
even for
10,000.
the military still, the same requirement?
Military, same requirement. They want to have a little bit of money left over because these 3, 4, 5%, since it's being forgiven, they want a stronger buyer than the 10,000 up here. So like I said, this one I go to first and see if the customer qualifies. And if they do not, then these are my fallback positions here. So we have the puzzle. Great question. Any other questions on that one? We're going rather fast. I was expecting more questions. Yeah, so let's see here. Now we'll go over here. One of the things I like to bring up is, and hopefully this was discussed in the prerequisite yesterday, I call it the 10 commandments of things that a buyer shall not do when they're doing that. Have you heard this one before? So,
They still do it.
yeah. But I give this to people because, you know, anytime they qualify with me, only because I don't want them to say, well, you didn't tell me. So we got here, but the first one, do not change jobs. Horror story, I was doing a loan for a broker at another company, you know, kind of someone at Audrey's level. We were driving to the closing, and the customer, we always do a verification of employment day before or the day of closing to make sure they still have their job. Well, turns out the lady had left her job a week before, didn't tell me. And I'm like, okay, because I've given her all this stuff. Well, one of the things, first-time homebuyers, they don't always understand the lingo that we do. So she knew she was doing a loan for a 30-year fixed, and how much the payment was, but she was working at a nursing home. So they were starting to do some layoffs, and she was trying to find a job that she could stay at for 30 years until she paid off the mortgage. And she was afraid that she couldn't stay at her current job for 30 years because they were doing layoffs. So you think of someone who is not from here, maybe hasn't had family that has owned a home before, so they think they had to stay at the same job for 30 years until they paid off their mortgage. So, no, that's not a truism, but you just, we all kind of get hung up in our own little lingo, and we don't explain things carefully. So now I also make sure I explain to customers, do not change jobs, but I also close when I'm talking to them. I said, now, as long as you make your payment on time, we don't care where you work from now on. You can go change careers, change jobs, whatever you want to do, but after you close. But if you're paying your mortgage on time, nobody's going to question anything. So that's one. Do not change jobs or become self-employed. And I get a lot of that. My employer, particularly truck drivers, has been a good one. They are a delivery route, and their employer comes to, well, we can pay you more if you will become an independent contractor. We pay you $10.99. And then it's your deal from there on. You had all your taxes, your FICA, and all this sort of stuff. Well, they don't think that, well, I'm doing the same job, working for the same people, but now I've changed from W-2 hourly employee now to a contract employee. That affects their employment. So I've had to have that conversation many times. The other is once they get pre-qualified, and we tell them, okay, you're pre-qualified, go look for a house, the consumer thinks they're finished. And so we're not going to be looking at the credit or anything anymore. So they find out the credit score is good, they go out and buy a car, or buy a large ticket item because they have great credit and they can put it on time. No, thou shalt not buy, and I put in here a little tongue-in-cheek, unless you plan to live in it. So if you're going to buy a new car or truck or something like that, the payments now on those things are as much as a house payment. So you may have just given up your house when you go buy your nice car. So do not let them do that. And that's the old joke, the horror of every loan officer is if you pre-qualify a customer and they come back with a contract, they're driving in a brand new car and you're like, oh God, what did you do? So that's definitely something that you want to strain to them, that keep all purchase, keep everything status quo. Don't let them change things. Because if once they get pre-qualified, we want to keep it there. And then after closing, go buy that new car, go buy those appliances that you want, those sort of things. Use your credit cards. Now, this is anything out of normal, but what I'm seeing from more and more young people, they like to run up credit cards so they get points and then pay it off at the end of the month. Well, depending on when the snapshot of the credit is pulled, you may have a low balance or you may have a high balance, and the payment will change, and that could affect how much you qualify for. So I always ask the customer I'm going through, is this a normal payment and normal balance for you? And they'll say yes or no, and that way I can adjust accordingly. But using them, yes, but using them minimally, as little as possible. And the other thing here is thou shalt not spend the money you save for down payment. Well, money for down payment has to come from a validated source. So it cannot be money, what we used to call mattress money, something you hid in your safe at home or under your bed or something like that, because there's no chain that shows where you earned it, where it came from. So if that does occur, if they say, well, I've got a safe at home and I got $5,000 sitting in there, I'm just going to use that. And then you've got to save your money through your payroll, get a gift from someone. So if you hear something like that, you need to talk to Carl, because funds to close are real important. The federal government has something called anti-money laundering, which they want to trace and make sure all money used for real estate is traceable back to its source, and it's a legal source.
How far back do you go? Like if someone has 20,000 in their savings and it's been there a year,
That's fine. We go back. That's back to our other comment where we most 2 months most recent bank statements. That's how far we're looking.
2 months. Okay.
So conceivably, if somebody, what's today, July, If they deposit money in July
That's exactly what it's for.
and they don't
exactly
apply
what it's
with
for.
me
Yeah.
in August
Yeah.
or September, but
Do they
they'll
not
come
give
in sometime in
receipts?
October,
No?
I'm going back 2 months, so
Swear.
just like it's already been there.
Okay.
So that's one of the things that we look
2
at.
months, okay, thank
So we
you.
go back 2 months.
5
Now, we also look at transfers and so forth. So if someone has on their checking account transfer from savings this much money, the underwriters go, I need a savings statement. And so we start peeling the onion and looking backwards. So if there is gonna be a problem with funds to close, it's better to tell up front, because most of the time, we peel the onion so much, we're gonna find it. And that's the amazing thing to customers, oh my God, y'all get into everything. I had one yesterday, he had a foreclosure 11 years ago and a bankruptcy 12 years ago, but we do a background check on everyone, and it showed up, and he says, but how did y'all find that? I said, well, we do a public records background search. We find out a lot about people. My favorite is I have one customer that was buying here as a second home, but he lived in South Carolina and worked for BMW. So I told him, I said, well, be careful coming down to signing. You don't want to get another speeding ticket. There's a clause in this. Well, I said, yeah, that was on the public records too, that you got a speeding ticket about 2 years ago. He said, my God, you know, so we do get in depth and we do find things. So hiding is not an option in getting a mortgage.
A bankruptcy shows on a background check?
Mm-hmm. Yep,
Are they a criminal now?
They're not a criminal, but it is part of activity because it's on public records. And if they're doing a conventional, you have wait 4 years. If it had a foreclosure tied in it, you got to wait 7 years before you get a loan. So that's why some people will go strictly with FHA, but that's a shorter waiting period, 2 years. So that's one of the things we look at, and that's why I give that data background check usually when the contract comes in. Our processing will take the contract, pull a background on the property to see if there's any liens outstanding against it, and also the customer, and make sure there's no problem. And they also check, they do a data verify on you, the realtor, see if you've been convicted of any financial crimes. Because if you are, then no, we can't work with you according to the federal government. Or if the seller has committed fraud or something like that, and financial crime, that's a problem as well. So like I said, the federal government spreads out pretty wide when it comes to housing. So keep that in mind. Excuse me. So down payment, closing costs, so forth, those are very important to track. One of the big things is customers will go and get qualified, and they'll head to your favorite furniture store, Ashley's, Room to Go, you name it. And they start looking at furniture, and the salesperson says, well, let's see if we can get you approved for credit. I just need your driver's license. And next thing you know, you've created an inquiry, which we have to question. And also, if you've opened an account and bought some furniture, now you've got a payment and a balance that we have to make sure you still qualify for the mortgage with that new payment. And it also affects your credit score. So now we gotta make sure the credit score hasn't dropped too low. So that's why I send this out to make the customer stay away from those things. You can do it all after closing. Those stores are still gonna be there after you close on your house. Just don't do anything before. And there's a lot of dreamers that will go do that. So please counsel your customers also. And that goes back to originating inquiries. Anytime the credit is pulled in the last 120 days prior to application, we're gonna question it. Did you open an account? And a lot of times it's shopping for a car and the car loan's already on the credit. Okay, we're good. Or they've shopped around a mortgage. And if they've shopped around a mortgage, we'll see that and ask them to explain, did you get a mortgage elsewhere? Is this a second home that you're buying? What's happening? So those are the kind of questions that come up. So we get really into their business. Large deposits. That's another big thing the federal government looks at when we're doing lending, is if a large deposit drops in and we can't source it, there is something called the Bank Secrecy Act, or SARS, where you have to file a report with the FBI if you think it's suspicious. And our underwriting and processing will look at it, send it to our management and say, okay, do you think this is suspicious? They make the decision. Never tell us what the results are. And so we have a point person in our company that will report all these and give them to the FBI. And if they think there is drug running, illegal activity, whatever, then we leave it to the federal government to investigate. But it's kind of, background check we're looking at, making sure that customer's not doing anything they shouldn't do.
So large deposits are considered by case according to their income?
Well, typically, if it's more than their payroll
Okay.
that they received in any weekly or 2 weekly period. So if they put in $100, not a big deal. But if they only make $1,000 every 2 weeks and they dropped in 2,000, where did that come from? And if it's a transfer from their savings account, okay, if you get the savings account, it all makes sense. But if it just comes out of the clear blue, then we can't use it. So when the customer goes, well, wait a minute, I've got all this money in my account. I said, yes, but you did a garage sale and you dropped in $5,000. I can't use any of that $5,000 to qualify you for a loan. So there have been many times they'll go to family and get a gift, and then after closing, the family squares off with each other. It's none of our business, but we've had to do that because they did not properly document where the money came from.
And that's considered a large deposit, $2,000?
Well, it's based on their income. So if you got somebody that's making $1,000 every 2 weeks and suddenly they drop in $2,000 out of nowhere, that's considered a large deposit. But if you got somebody that's making $10,000 a month and they drop in $2,000, we're not going to worry about it because they make so much money.
What about self-employed?
Self-employed, then we would ask you to document where that came from. And if it was an invoice, something that you did, then we would match it up. Okay, well, I got paid $2,000 and here's an invoice that I charged for $2,000 and the dates are close, then it makes sense. Yes, ma'am. Changing bank accounts. This is another thing they look at, is if you have a 5-star 1 month and then you have a 1-to-1 the next month, you're shuffling money around. That's a great money laundering apparatus. So
But if you can prove that there's a reason they changed bank accounts, like maybe, stolen identity or whatever.
yeah, the biggest one is ID theft.
Yeah.
Then we would say, okay, well, you had ID theft, well, you filed a police report, right? So we need a copy of that police report. And did you put something on your credit report? And then we pull the credit report information and it'll show, okay, yes, you filed.
Okay.
So it makes sense, but if you just start doing that without a good reason, it could be suspicious.
Sure.
So that's something that we look at as well. And co-signing. There's a lot of people out there that think co-signing doesn't have an effect on them. Well, they just use my credit so they can get that cell phone. Or I had to co-sign for my kid to buy furniture. And I go, well, when you sign, it says that you're responsible for it equally to as the other party. Well, they're paying it. Okay. Well, then how long have they been paying it? 12 months or more? And can you prove that from a separate account? Or you're on the hook with it. It's your bill just as much as the other person. So that's why I tell people, when you're trying to buy a house, don't co-sign with anybody. Just say, I'm trying to buy a house, I can't help you. And it usually backs people off. And making large purchases, that goes back to, we have holiday sales and so forth. I get the call, well, they're having this great sale on refrigerators at Home Depot, and I want to buy it now. And I said, go talk to them about a rate check. You can't do anything until after you close on your house. We don't want any large purchases. Well, what if somebody else buys it for me? That's your business. But if you're using your money and your credit to buy something, it could impact your qualification for a mortgage. So stay away from that at all possible. So just keep an eye on your customers. You guys will talk to your customers more casually about what they're doing. And if they say, well, I'm going to the furniture store, and you go, oh, I just showed you houses. You're going to furniture, why? And you want to make sure you pull them back and say, what are you doing and why are you doing it? Because you don't want to jeopardize them being able to purchase the house. So that's kind of the 10 commandments I give out to all my pre-qualified customers. And it creates questions. It sometimes frightens people. The best one is when I say don't use your credit cards. I have the customer call and say, well, I need to use my credit card to pay for the appraisal. Okay, well, yeah, you can on this instance because it makes sense, but we don't want you to do it for other frivolous ideas. You'll have other customers that want to save their money, but they have money in a safe. I tell them all the time, it says, well, just leave your payroll going into your account, and if you have money in the safe that we can't document where it came from, use that to buy your gas, go buy your groceries, so forth. Use that cash, and then your checking account with each payroll deposit will build up to the money that you need and replace that money you have in the safe. And so just some things you have to talk them through and work with them. And if you get questions, that's what all of us preferred vendors are supposed to do, is be a resource to you. So if you have a question, hey, I got this situation, I don't know what to do, and it's about financing, call us. That's what we're here to be, as a help to you. Otherwise, we wouldn't be part of the team here and trying to help you guys out. Because the whole idea is to help people and sell houses, and that's what I like to do. I really enjoy it. It's a lot of fun to be a part of it. You guys work harder than I do. Mine is great. If it fits in all these criterias, okay, we got it. You guys have to deal with a lot more aspects of the customer's needs than I do. So just, I understand what y'all do and you work hard. And so if you work with me, I try to make you look good. So don't worry about that part. Let's see if there's anything else we need to cover. Let's see. Did you do it? Yeah, I all this. Well, basically, I think we covered anything. Is there anything you wanted to go back? I know some of you came in after we started. Did you want to go back and look at the First Time Homebuyer programs the state offer, or did y'all get that information? Or?
Sure.
Okay, for this one, let's see. And this one is offered by the state. Oh, one thing I didn't tell you, if you want me to market this, and Piero can tell you, is that I can create flyers for these where your information appears here on the right and I'm on the left. So if you want me to make one for you, and just let me know, and I can send it to you as a PDF, and you can print it, send it off to customers, whatever you would like to do. But there is 2 types of assistance here that are $10,000. And remember, one is $10,000 homeownership loan program, HLP, where you pay that back over a 15-year term at 3% interest. And this program is a lump sum of $10,000 that you pay back, and it's only paid back when you sell the house, move out of the house, or conceivably, 30 years down the road, a consumer pays off their mortgage, and then they get a letter from the state. Hey, you remember 30 years ago you borrowed 10 grand from us? We need it back now. So that's how that one would work. And then you have down here this is when I was talking about a need that you referenced before, a bit stronger customer, the 3, 4, 5% of the purchase that can be used for down payment or closing costs, and that one is forgiven over 5 years at 20% a year. So that's another program that's out there to help. But usually these customers are not just the 640, they're usually probably in the 7s, and they qualify a little bit better, and then have some money left over in the bank after closing, usually a couple months worth of payments. And back to your question, these 2 up top, they're usually done mostly with FHA. So as long as there's enough money there for the closing costs, down payment, you don't really need reserves. And 640, as long as you're above that, I usually don't have a problem qualifying the customer. So usually FHA is the newer customer, the more challenged customer. Conventional is the customer's a little bit better, just needs some help. So, and then we have here the VA version that we talked about before. Now you'll get the question, you see here it says VA, FHA, and conventional. Why would Salute Our Soldiers talk about other loans other than just VA? Mm-hmm. Well, here you'll get the question where you have the enlisted person and they have a significant other, say maybe a girlfriend or something, that's not military. Well, the VA has a funny little rule that if you're going to be on a VA loan, either you have to be the spouse of the active duty or the veteran, or you have to also be active duty or veteran yourself. So that's a little, everyone else is pretty freewheeling. You don't have to be married or anything. The VA is a little particular about that one. So it's a little odd. So what offers is we can still do the Salute Our Soldiers program with FHA or conventional, so that you can have a co-applicant that may not be military connected or may not be a spouse. So that helps out quite a bit. Now the cool thing about this program is it has probably the best rates out of any program that we have anywhere. Right now it's been hovering between 2.5% and 2.75% for this program, versus all the others are running around about 3.5% all the way up to 4%, depending on which program you have. So this one, sometimes I can get a veteran in who has the 640 credit score and get them in this program, and get them a better rate than they could if they were bringing their own money, because their credit score is low, so VA maybe wants 2.875, 3%, and this one's offering 2.5%. You know, I've done that many times with veterans and say, you know, well, you don't need the assistance, but you can get a better rate here, and it works out for them. So again, it's all about what helps the customer the most. So that's the job. So did you have any questions on this section? No? Okay. So did y'all learn anything today? Or?
Yes.
Oh, yeah.
Yes.
Okay.
Definitely.
Do you know if you have a first-time homebuyer whom to call?
Yes.
You.
Like I said, I've been a processor, underwriter, and now an originator for these. So when I say 30 years, it's all that time spent. So I've been doing a lot. And that's why the state has me on their board, so that they know I know the product. And I'm the guy, one of the 15 of us in the state, whenever they want to know what's happening, what's working, what's not working with these programs, I'm one of the guys that call to Tallahassee and talk to them and say, okay, this is what I'm seeing. So like the 10,000, up until 6 months ago, it was only 7,500. But we all know the price of housing is going through the roof. So 7,500 barely scratched the surface. So we got it up to 10. And we wanted a repayable type because a lot of customers will say, well, I'll take the 10, but I want to pay it off. How do I do that? And most financial people say, well, if you get free money, interest free, don't worry about it. But there are those customers that go, you know, I want to pay it back. I don't want that hanging over my head that when I sell this home, I have 10,000. Well, if we can work out a program where they can pay it off over time, that helps them out, eases a lot of people's consciences, so, and the money goes back into the fund for somebody else to use. So it's not a bad thing to recycle the money. So, anything else? Do y'all have any situations that you're having, or anybody's hit you up with a question about first-time home buying? No? Okay. Well, thank you very much for all your attention. Please get some food.